This is your first Friday in the new year, 2019. Welcome, everyone, to the program. This is your Business Morning with me, Boston Amafaya. We're live to you from Lagos. Of course, Nigeria's political period and the countdown to the 2019 elections making the headlines, but quite a number of issues are happening around the global economy and the markets. And just in case you're getting carried away by the political noise, you need to pay attention to a number of economic issues happening around the world, which will have serious consequences for the domestic economy. And that's the chief focus of the program this morning. The global markets mayhem of 2018 is continuing in the new year 2019 as trade war between Washington and Beijing revs up ahead crucial talks, which is scheduled for Monday next week between the U.S. and China's vice ministers. Meantime, you see that the two world powerful economies, the United States and China, posted negative manufacturing index, showing slowdown in the U.S. Institute of Supply Management and the Chinese Purchasing Managers Index readings for the last month of 2018. Meantime, the U.S. Treasury yesterday, Thursday, released a new set of data showing that the Trump administration has increased U.S. national debt by $2 trillion in just 2 years. That brings the United States total debt to the doorstep of $22 trillion. Meantime, a few days ago, the global debt portfolio, according to the International Monetary Fund, is now $187 trillion. That was as at the end of December 2017. Meantime, if you're in the market, you already know that Apple Incorporated, one of the world's largest company by market value, gave what you call the second quarter 2019 revenue warning, which sent stock markets around the world into a tailspin for the last 2 days, with emerging and frontier markets taking most of the heat. Within the last 24 hours, other U.S. companies with sales in Asia has followed Apple's footstep by downgrading their earnings outlook because of slowing demand in China, the world's second largest economy. From Marriott Hotels to Hilton Hotel and Tiffany and other automakers like Daimler, they're saying sales is slowing down in China. The consumer demand is beginning to wane. On another front, there are worries about how many times will the U.S. Federal Reserve raise rates in 2019. And that is sending some jitters across the markets. Yesterday, the Dallas Fed Bank president, Kaplan, told Bloomberg that the Powell's FOMC should not take any further action on interest rates until these issues are resolved, for better or for worse. What are the issues that Kaplan was talking about, the Dallas Fed? He was talking about the uncertainties about growth in the United States and China, weaknesses in interest-sensitive industries, as well as tighter financial conditions around the world. Of course, you know that oil prices went on a wide ride since the second half of last year, and that is continuing in the new year, because OPEC plus Russia supply are surging despite late 2018 renewal of the cutback among producers, flagging Chinese demand and geopolitical tensions. Despite this array of bad news across economies and markets, gold rallies past $1,300 an ounce on Thursday, proving that it's still the #1 safe haven status as equities slow down, rattle investors around the world. We'll talk about what all this means for Nigeria, that is buried deep in political tensions and jostlings for political office in February 2019 general elections. Some warnings have been provided. We'll revisit some of these warnings that have been given to Nigeria last year to watch out for what is happening not just inside but outside the country. Now let's get the show started with the marketplace, where the stock market here yesterday fell majorly within the banks and industrial sectors as investors took profit, and Nigeria's frontier market took a beating with the rest of the world. Temple Ashaju is our business correspondent and is live to us from the Nigerian Stock Exchange, our studios downtown. Good morning, Temple. Give us the numbers.
Good morning, boss, and thanks for this time. So we were down yesterday, some 96 basis points again, and that's because again we saw sustained bearish sentiment for the second consecutive session this week. As it's been predicted, we're going to be seeing a whole lot of sell down at this point in time. Investors continue to drag in terms of resumption on duties, coming back to business and trying to put down their money for investments and a whole lot of things like that. Then again, the fact that we have election around the corner, because of the uncertainties that this comes with, we have a lot of investors now selling down, reducing their stake in a whole lot of the companies tradable here on the Nigerian Stock Exchange and even on the other side of the market, which is the debt side of things. So the all-share index dragged yesterday to 30,771.32 after losing some margins of 96 basis points. We saw sell-offs on both the Tier 1 and Tier 2 names in the banking segments of the market, which eventually brought the segment down some 2.15%. In terms of the volume, we did some 169.19 million units, valued at 1.12 billion naira. But for the sectors now, look at the banking side of things. Given the losses that we saw on Guarantee Trust Bank by some 4.49% and a whole lot of other names, even including the likes of Diamond Bank, that sector dragged 215 basis points. Consumer goods segments of the market was also down marginally yesterday, some 0.02%. If you look at one of the major contributors to that is Dangote Sugar. In terms of the industrial goods segment of the market, WAPCO yesterday slowed some 4.17%. And at the end of the day, coupled with all the losses that we saw in that segment, the sector came closing at 2.83% negative. Insurance segment of the market, we saw sovereign insurance, which dropped some of 4.7%, also weighting down on that particular segment of the market by 0.12%. The oil and gas segment was the only segment of the market that was positive yesterday on account of the gains that we eventually saw on Forte Oil, which rose back from 28 naira per share to 30 naira per share yesterday in the market. At the end of the day, it came closing, the sector ended closing at 0.64% positive, having seen some 9.6% gains in Forte Oil. And this now takes us to the energy markets, where we saw basically no change in the share price of a lot of the companies we track there. Corn oil, number one on our list, still at 23 naira, 25 kobo. We saw less buy interest on that particular company yesterday. Some 19,923 units of shares traded there yesterday, but it didn't impact on the share price of the company. Forte Oil, as we explained yesterday, closed at 30 naira, 70 kobo, rising some 9.64% after we saw some close to 1 million units of its shares traded there. 11 PLC down some 38 basis points. MRS, which is one of the companies just added now to the NSE 30 components after the review in December, didn't see no trades. In fact, as a matter of fact, no trading till date. That's what we're saying there. Oando was down yesterday, was flat. Seplat was also flat. You got Total, in spite of the new production arrangement it had at its Egina oil field, that's still flat at 203 naira. Etna PLC flat at 4 naira 70 kobo, and Japol flat at 20 kobo per share. At the unlisted securities market, we continue to see this kind of bullish sentiment. Yesterday, it rose some 1.26%. How did that happen? We saw just a volume of 113,009, and that was just valued at 3.45 million naira. And all this just took place in 4 deals. Quite a number of companies there, investors have been crippling into that market to put their fund into that particular market as they divest from the equities proper at the Nigerian Stock Exchange here, and a couple of other investors sell down at the debt side of the market. So the USI, which stands for the Unlisted Securities Index, closed 745.47. At the bonds market, which is part of the fixed income market now, we saw bearish trading yesterday. Was absolutely bearish for a lot of the whole segment of the markets. We saw yields rising some 12 basis points yesterday to 15.36% at the bonds market. We saw the likes of the 23rd of February 2028 priced at 92 naira 40 kobo, after we saw some 1.3 billion naira worth of transaction on that particular counter. We saw basically sell pressure across board, as all the numbers you have on screen there recorded some expansion in the numbers. At the short end of the curve, we saw some 7 basis points expansion. At the mid end of the curve, it was 18 basis points in terms of the kind of yield that we saw closing there. Long end of the curve also saw some 7 basis points kind of expansion. In particular, the March 2024 security experienced more sell pressure yesterday at the bond segment of the market. In terms of treasury bills too had a very negative outing yesterday, Thursday. We saw yields also expanding some 7 basis points to 15.44% on the average. Short end of the curve, we saw huge expansion, some 8 basis points. Mid side of the curve, some mild expansion, 2 basis points expansion. At the long end of the curve was where we saw more expansion by 9 basis points. We saw yields broadening there. Of course, we know that yesterday the CBN also helps to bring in some inflows, given the OMO maturities that took place there at the market. And of course, that's by way of OMO and treasury bills there, 424 billion naira, and of course, some 84 billion naira worth of T-bills by way of open market operations, Bosun.
Yeah, Temple, thank you very much. The market, a bit of one side, a bit sweet, the other not so sweet. Thank you very much. Of course, if you add, Temple will touch base with you on the trading floor within the hour. Temple Ashaji, our business correspondent. If you look at the FX market, just add that to what Temple just gave us there. There was a bit of a depreciation in the naira value against the US dollar on Thursday, the second trading day of the year for elsewhere in Nigeria. The naira down 0.24% against the USD at 365.30 at the I&E FX window, but the naira was flat against the dollar at the parallel markets. Temple talk about the bearish sentiments in treasury bills and bonds on Thursday. Rates went higher on those two naira papers, two different asset classes, treasury and bonds. We'll talk about that later on the program. But first, let's get you back to the big news. The big news is not so good news. Turbulence is the takeoff. This says uncertainty is the new certainty across the global markets and economies. You need to be prepared for what lies ahead. We got some warnings last year from the central bank governor, who says the regulator will focus on 3 main issues because of the headwinds from the global economies and marketplace. We're discussing that when we come back after the break. This is your Business Morning, Friday edition.